Hey there. So here's my trade recap for the 15th of October, 2025. It's an options trade. You can see long here and exit out here. And trying to explain it to you. Very simply, I'm trading the SPY or options on the SPY. At first, generally the price was grinding up. I got involved around this area. It went up, came back, stopped out. Got in a little later on. I think it was in this area. It went and came back against me, and I took a small stop. So two small stops early in the day. And then I didn't watch it. It was just grinding down. And it was in this area around about just after noon, around 12:15 or so. I started watching it, came back to the screens and noticed that, well, the price is going down. That's all there is really. And it's looking at lower highs. So I'm always seeing the lower highs. It's telling me the sellers are stepping further and further down. And this begins to look like a consolidation. Now, the thinking is, or general wisdom is, price will usually continue doing what it's doing, as in keep going in the direction it's going, more likely than it will reverse, completely go in the other direction. So going in with that theory that it's in a downtrend, so I'm focusing on the downtrend unless it gives me a massive reversal signal. So as I was watching it in this area, nothing to tell me it's going to massively reverse, no neat double bottom or something like that. And so I'm thinking there may be an opportunity to continue this short. It's just relaxing before it goes, or it could just chop there all day. Don't know. So I'm watching it and looking into the options contract because that's what I really want to execute on. And I get into the 655 option. The price is here in this area, so just about at the money on the options contract. And it's right about in this zone. What happens with the options, these are put options which go up in value as the price of the underlying goes down. What I'm noticing is that it's made a bit of a resistance level right about there. You can see that. So I'm thinking, well, if it breaks through there, there's something interesting there. I'm getting these on the options. I'm getting higher lows. And here's a pullback. Remember, the idea is that the price will just keep going in the direction it's going unless it gives you a major reversal signal. So I'm not thinking about going the other way. I'm just trying to identify a good setup to continue going in the direction that it's going. And I figured right about here, it looks like it may well break out of that minor resistance zone. It could be a good place to enter. And I put my stop below the previous real big bullish activity, which you can see the bulls are right here. And so that's the big candle also just about in the same place. So my stop's about there. So the entry is there about 275. The stop's there about 225 or so. Got close to the stop and didn't stop me, and it starts working. Now, as far as a target is concerned, I went into this one with a totally different mindset than I normally do. Those of you who've seen me trade or trade with me for the last few years have noticed I always trade with RVR in mind. So for every dollar I put at risk, I want to make sure I have a minimum of $3 that I can potentially make for the $1 at risk. But this time I went in with something different, something I've been working on. I figured I'm just going to stay in it until it gives me a massive reversal signal, until it doesn't want to go anymore. Or it gives you these massive pops in your direction, and in which case I de-risk. So I'll explain those two right now. So as I enter, it has a little pullback and then starts to work. After it breaks out, with this candle breaks out of that resistance area. Now I'm looking here at the options chart. I'm really just paying attention to the options chart, not looking at the underlying. So it pops out here. My stop's down here, then I move it up to about $2.30 or so. Then this thing consolidates, puts in this little bit of a low here, and then breaks out there. So as it starts to break out, I very quickly move my stop into here, about 275, close to where I entered. But then this candle is so massive it goes that then I just break my stop basically about halfway into that candle, about 360 or so, somewhere about there. And then it pops again very aggressively. I move my stop right into this consolidation area, basically right in the middle of it, around about $4. So you can see what I'm doing. I'm really just trailing the price. I don't have a target in mind. I'm not taking any partials as it goes into 5R and 6R territory. Just let it run. I'm not really bothered with it. I'm just interested in if it gives me a reversal signal. So I'm just doing this, and it starts to get very aggressive. Now in this area, it gets difficult. I'm seriously in the money on this contract. You can see the gaps on the 1-minute chart. It becomes very difficult to read. I'm not sure what I'm really doing anymore. So this is where I start looking at the underlying, trying to get a clue of what the price is really doing. And it's in this area. You can see it's just going faster and faster. So I'm just chasing the price, or rather trailing the price down. It bumps into this red line, which is the low of 2 days ago. And the correct way for me to exit this trade is to, well, wait for a big double bottom. That would be a reversal signal. I never had it over here. Or just keep trailing the price until the price comes back and stops me out. So in this case, if I'm trailing these big candles going down, every time it makes a giant candle, I just trail it, zoom into it a little bit. Got this white candle that pulls up and then pulls down, so the stop should be right above that. The next candle gives you another wick and pulls down, so the stop should be right there. This big red candle, at the end of this red candle, I should put a stop basically on that. So when it goes back up, that would be the exit. So the entry was somewhere in this area and the exit was here. That would have been the correct thing to do. However, I got a little bit eager on this one, and you can see the exit was right there. As the price bumped into the low of 2 days ago, I hit the exit button and got out. So I was just a little too eager. I didn't have my psychology in the right place to just hold it for that extra, 30 seconds or so would have been to do the correct exit, which would have led to a tiny bit less profit, but it would be the correct thing to do. So anyways, that's the whole trade. Two tiny stops early in the day, and then this big one. This one was almost $50,000, so more than made up for a couple of tiny losses. And I like this kind of trading. You're going in when the price action is telling you it's moving in that direction, and you're not having a target in mind. You could get you exit when there's a reversal signal against you, so you could be out at 1R, or you could hold on to it for 20R potentially. And the only other way to exit other than a reversal signal is just to trail the price. You have massive price movements in your direction, you trail it. And just studying this stuff, looking at back testing and all the various things I've been studying in the last couple of weeks and the books I've been reading, what I've discovered is I think I can get into a lot more bigger trades by trading this way. Today was one example, and let's see how I can evolve this strategy moving forward. Hope this helps, and I'll see you in the next video. Thanks.